much better. Now, the very next thing is going to be your chart of accounts. So to get to the chart of accounts, we're going to click on the gear menu up here in the top right. Then we're going to click on chart of accounts. Now in the chart of accounts, you're going to see what QuickBooks set up for you at the beginning. Now this is going to be a very basic chart of accounts. It's going to be very generic. It may or may not contain all the accounts that you need. Actually, for sure, it won't contain all the accounts because you have to create your bank account, your credit card account, your loans, all of that stuff. So these are split into two categories. You're going to see all the accounts that have what's called a running balance or a QuickBooks balance. So you will notice that there are some accounts that have a dollar amount associated with it. At the moment, it's a zero. But all of these that have a dollar amount associated with it, that they have a QuickBooks balance or a running balance, these are called balance sheet accounts. Balance sheet accounts are those categories, those accounts, those categories of value that are going to be in your balance sheet, which is one of your two primary financial reports. And then anything under that, they're going to be profit and loss or income statement accounts. And these accounts will put together your profit and loss report or your income statement report that represents your sales, your costs, your expenses, and your bottom line, how profitable you were in your business. You will notice that all the profit and loss accounts have a run report button on the right side, and then all the balance sheet accounts have a view register button on the right side. That's also sort of another way to know whether it's a balance sheet account or a profit and loss account. Let's start by creating our bank account. So we're going to click on the top right. We're going to click on new. You also have a drop down menu for import. If you happen to have a chart of accounts in Excel, you can do that. We're not going to go through that in this particular video, but you could import them from Excel. Or of course, if you're coming in from QuickBooks Desktop, it's going to bring that chart of accounts with it. But if you're starting from scratch, you're going to have to create all these accounts one by one. So we're going to click on new on the top right, and we're going to start with our bank account. So we're going to click on bank. And then I normally like to name these, the name of the issuing bank, and then the last 4 digits of the account number. So we're going to call this one Chase. I'm going to call it Chase Checking, and I'll put the last 4 digits, 1122. So that's the last 4 digits of my bank account number, not my debit card, my bank account number. And then here it says a number, that's actually the account number itself. We'll get to that later on. I'm going to skip putting a number there for now. You don't have to put anything there. We'll just put here Chase Checking 1122. We'll leave it as that. Now let's assume I'm setting up my QuickBooks file for the first time in the year 2018, and I do want to bring an entire year's worth of data. So when I close 2018, I have a full year, so I can do my tax returns and have a full year's worth of accounting. But if I have an account existing from before, I had a running balance from before, I got to go get the bank statement that closed on 12/31/2017, and I have to write down that ending balance in QuickBooks in order for that balance to come in correctly. So I'm under balance, I'm going to put whatever that opening balance is. So let's start by setting up the bank. So we're going to click on new on the top right, and we're going to select bank as our option. So we're going to click on bank, and there's a couple of options here under detail type. For the most part, I don't get too stressed out about these. If you get this wrong, it's not going to be a problem, but QuickBooks does force you to select one of these. So we're going to select checking, and then we're going to give this a name. We're going to call this Chase Checking. Let's make it all caps. That'll probably be better. So Chase Checking, and we'll give this the last 4 digits of the account. It's really important to bring in the last 4 digits of the account, especially if you got multiple accounts going on. Then under balance, we're going to literally grab the bank statement from the closing period from 12/31/2017, and we're going to bring that in because then we're going to actually do the accounting in QuickBooks for all of 2018. So we're going to open up the actual bank statement. So I open the actual bank statement that I happen to have in my computer. You may have it printed. That's totally okay. And we're noticing here that it is for the ending of the year. And we're also going to copy that ending balance. Obviously, different banks have different ways of showing those bank statements. So we put in that ending balance without the dollar sign, and we put here 12/31/2017, and then we click on save and close. And that's how we added our bank account. Now let's add all of our bank accounts. If we happen to have multiple bank accounts, multiple banks, you want to bring all that stuff in with its beginning balance. Let's now bring a credit card. So I'm going to click on new. On the category type, I'm going to go down to credit card. And then under credit card type, there isn't any other option, so we'll leave that there. And we'll call this one Chase Visa, and also put the last 4 digits of the credit card. And we're gonna go to balance, bring that balance over. Let me pull up my credit card balance. Okay. And it looks that for this particular statement that closed on 12/26/2017, which is the closest statement I have for the ending of the year, the balance is 7,000 and change here. So I'm going to take that balance and put that on that that credit card that we're creating. So I'm going to bring that in. I'm going to paste it in there if I happen to copy and paste from another file, or you just hand key it. This one was 12/26/2017, and we'll go ahead and click on save and close. And there we go. We got our bank, we got our credit card. Let me add a loan. I also happen to have a loan with that bank, so I'm going to click on new. And for a loan, I'm going to click category type, click on the drop down and select long-term liability. This particular loan is payable in 5 years, so it's going to be a long term. But if you have anything that's a line of credit or something that's payable within the year, then you want to pick current. That's basically different. Current is we're going to pay it off within the year, and long term is going to take us more than a year to pay that off. So I'll pick on long term, and then we'll call this one, let me see what we got here. Let's call it a note payable. That's right. We'll call this one Chase Loan 5-year. We'll call it that. And then the unpaid balance for that loan, let's pull that up. Okay, and that's 32,752. So we're going to put that in there, and that was as of 12/7/2017. So 32,752. Let's put that in there, 32,752, and that's as of 12/07/2017. Not all statements are going to have that pretty end of the year, end of the day, end of the month, end of the year dating philosophy. So you have to get the statement that is closest to the end of the year, but it doesn't cross to the beginning of the year, because we want to get a complete set of financial statements for the current year. So it's okay if we have something that's around December somewhere, but the one that we have closest to the end of the year, and we hit save and close. And this is a moment that maybe is worth it for you to sit down with an accountant, just because it's difficult for most folks to know what goes in the balance sheet, what balances do we need to bring over. Most of the times we actually take the tax return from the previous year, and hopefully the accountant put a balance sheet together, and we want to make sure we bring in all those balances. If you don't have an accountant, you have my email below. You can hire me. I certainly help a lot of people with their QuickBooks and their taxes. But if you have your own accountant, contact your accountant. This is a great moment for you to work with your accountant to get that chart of account started, especially because bank, credit card, loan, that was pretty easy. But then what gets a little bit tricky is adding your assets and the accumulated depreciation and that sort of thing. Let me show you an example. So I'm going to click on new, and let's say that I have 2 assets. I have some computer equipment and I have a truck. So I have to create each asset that gets depreciated separately into the books. So I'm going to click on fixed asset, and this one's going to be, let's see what options we have here. Fixed asset computers. Okay, that was the option. And if you can't find what you want here, just click on other fixed asset. But in this case, there was something that made sense there. And we'll call this one computer equipment. And let's say that this, I think I misspelled this, computer equipment. And then let's say that I originally paid $5,600 for that computer equipment. And I'm going to put there as of 12/31/2017, because that was the value at the end of the year. Now that doesn't include depreciation. Depreciation would be another thing. There's a little checkbox that says track depreciation for this asset, and then I can actually bring in my depreciation. And again, that's where an accountant helps to kind of help you figure out where this number comes from. But normally you copy that, or you take that from your tax return if your accountant does depreciation calculation. So let's say what we have depreciated so far is 3,200 as of 12/31/2017. And then I click on save and close, and QuickBooks will actually create my asset for 5,600, and then we'll create what's called my counter asset or my contra asset, which is a depreciation that gives me the net value of the equipment. Let me do the same thing with my truck. I'm going to click on new, click on my drop down, and then look for fixed asset. And then let's see what options we have here. We should have something here for vehicles. Our vehicle, that's perfect. So we'll pick vehicle is the last one, and we'll call this one Toyota truck, and I'll give it the year. So let's say it's a 2015, and the original cost for the truck was $36,890. Typically that will be in your fixed asset report. So I'll put 12/31/2017. I'll click on track depreciation for this asset, and let's say that we have depreciated in 2 years. Let's say it's $12,950, and we'll put there 12/31/2017. Again, that's the pattern. We're doing accounting for the whole 2018 year, and we're bringing in these assets and these liabilities from the previous year. Let's say I also have a loan from Toyota. So I'm going to click on new, and then I'll create another long-term liability. So I'll click the drop down, and I'll click on, let's say, long-term liability, and we'll call this one, that's fine, it's a note payable, that's right. We'll call this one Toyota finance loan. And let's say that what I owe on this loan is $21,560, and that's also as of 12/31/2017. So notice I'm putting the cost of my vehicle. I also put the depreciation, and I'm also taking into account the loan, what I owe to the bank, right? Because I didn't buy that truck outright. And there's other elements in the balance sheet that you may need an accounting professional to walk through it with you. If you don't have an accounting professional, and again, and this is confusing for you, you can skip it. But at some point in time, you are going to have to enter those balances, because if not, your books are just not going to be correct. Now, after my chart of accounts is done, at least the balance sheet portion, we can pull a report and we can see what that's going to look like at the end of the day. So we're going to click on reports. We're going to click on balance sheet run. And then normally what I do is I'll run a balance sheet for last year. So we'll do last year here under the report period section. And I'll click on run report. And we're going to see what that looks like. So we're going to notice that our balance sheet now hopefully matches our tax return, our other balance sheet that we've done for the previous year. We should have our banking ending balance, our assets, and our depreciation. So we have our total assets. Then we should have our credit card balance. We should have our car loans, our other loans. So we have to construct our entire balance sheet. So that's great. Let's go back to the chart of accounts, and let's now take a look at our profit and loss report. Our profit and loss accounts. So once we scroll down to all the accounts that have a running balance, you want to make sure that you also create your equity accounts. I don't want to get too much into that, but you want to create your equity accounts. If you have multiple partners, you may want to make sure that you do create each partner's account, because each partner has the capital they put in and the capital they take out, the distributions they take out. If it's a sole owner, then you can just have one account called owner's capital, owner's pay, whatever. But if you have multiple owners, then you want to make sure that each owner has his own capital account. And typically this opening balance equity you see here, this $50,800, that is going to then be divided across all the partners, and that's how the balance sheet balances. Let's skip balance sheet stuff so we don't get too much into the weeds on the accounting or the accounting elements of this. Let's go now down to the profit and loss. So we currently have 5 income categories that QuickBooks created for me: billable expense income, sales of product, shipping income, uncategorized income. You may want to think about whether or not you want to use those. You want to delete some of them. Let's say, for example, the sales of product income I don't care about, so I can click on the drop down and click on delete and hit yes, and that will get rid of it. So then I don't need that category anymore. Let's say shipping income. Let's say I don't charge income, so I can just click on delete and I can start getting rid of them. Some of them it won't let you do it because you have enabled certain options. Remember when we were in the settings, we clicked enable shipping. That account cannot be deleted because the shipping line is going to go there. So that makes sense. On categorized income, let's say I want to delete that, hit yes. it doesn't let me delete it because that's a default category that QuickBooks uses when you don't know what to do with a piece of income. And let's see if I can delete billable expense income. Click yes. Okay, it did let me delete that. I assume that if I turn on billable expenses for customers, again, it won't let me delete that. So now we're down with three income categories. Now let's take this one called sales and let's edit it. And I'm gonna click on edit, and then I'm gonna call this one computer sales. Let's say that my company sells computers, sells training, and it also sells parts. So we're gonna call this computer sales, okay? So we have one income category called computer sales. I'm gonna click on new, and then we're gonna go to category type and select on income, and then under detail type, if you can't really figure out what works best here, pick the one that works best. Again, this detail type is confusing. Don't worry about it being right or wrong. Half the time it doesn't matter anyway. So we're gonna call this one training income. Okay, because that's another category of income that we have. And then we said the other one was parts, just miscellaneous parts. So we go down into our category type, select income, and detail type, we'll do other primary income, and we'll call it parts sales. Perfect. So let's see what we got here in our income category. So now we have computer sales, part sales, shipping income, training income, uncategorized income. Okay, so let's say on the cost of goods sold side, which are direct expenses, let's say that we want to create three categories. We're going to have computer cost, part cost, we're going to have shipping expenses, and then we're going to have subcontracted trainers. So I'm going to click up here to new, and let's start with category type. I'll pick cost of goods sold, and we'll start with, let's see, cost of labor. Okay, cost of labor is fine. We'll call this one subcontracted trainers. Okay, that's when we used third-party trainers to do some of the training for our computer work. Let's go to new, and let's create another cost of goods sold category. Again, cost of goods sold is my direct expenses. Let's see what we got here. Let's see, supplies and materials, and we'll call this one cost of computers sold. So that's whenever we sell a computer, the cost element of that, we go to that account, and then we click on new, and then we go to category type, go to cost of goods sold, and the other one was cost of parts. So cost of parts sold. Oh, I didn't select the detail type. This was supplies and materials, and unfortunately when you change the detail type, it renames it up there for you, so you have to redo it. So cost of parts sold. And one thing that I don't know if you noticed, but profit and loss accounts or income expense categories don't ask me to enter beginning balances. Beginning balances are only for balance sheet type of accounts. So we click on save and close, and we have a pretty nice setting here for all my income accounts. I have all my cost of goods sold accounts. This generic cost of goods sold one I can try to delete. Let's see if it lets me. And yes, it did. All right, so we want to get rid of all the accounts that we don't want to use to avoid any confusion. I think I forgot one more. I think it was shipping costs. So let's go to new. Let's go to category type, cost of goods sold, and we'll do shipping, freight, delivery. We'll call this one shipping costs. Okay, and what's nice about having your own terminology, your own names in the chart of accounts is because you don't want to really just get stuck with whatever QuickBooks gives you. You want to use stuff that makes sense to you, that makes sense to your business, that ties to the activities of your business. Okay, so now we got income and cost of goods sold. Let's take a look at our expense category. So we have advertising and marketing. That's good. We have ask my accountant. That's when you really don't know what to do with a particular category and you just send it there because you mean to ask your accountant at some point. Bank service and charges, car and truck, where we're good so far. Contractors, let's say we're not going to have contractors in here, so I'm going to click on delete because our contractors are going to be under that other category we created, which was subcontracted trainers. So again, I'm starting to clean up and delete things I don't need. Job supplies, okay, let's say that's fine. Legal and professional fees, travel and meals and entertainment, Office supplies. Actually, meals and entertainment shouldn't exist. Let's change that. Let's go to edit because in the 2018 U.S. tax law, they killed entertainment. Entertainment is not even a deductible expense anymore. So we're just gonna call it meals with. Let's call them meals with customers. Okay, that way we have probably a little bit better terminology that makes most sense to most people. So we got meals with customers. Where are my office supplies and software, other business expenses? That's kind of a miscellaneous category. Reimbursable expenses. Let's delete that. Let's say we don't need that. So again, I'm trying to clean my chart of accounts, make it as easy and friendly to use as possible. Okay, let's say what else we got? Rent and lease, that's good. Repairs and maintenance, tax and licenses, travel, uncategorized utilities, and depreciation. So let's say that's a good set of accounts. Let's say that I wanted to create some sub accounts. So under travel, I wanted to create some subcategories. So if you click the drop down menu here, it gives you the option to edit or delete. So let's say I like travel as a generic category, so I'm not going to edit or delete it, but I'm going to create some sub accounts under it. So let me scroll up. Let me click on new on the top right. We'll click on the category expenses, and under detail type, we'll go down to travel. And again, if you can't get detail type, just pick other or something like that. It's not a big deal. So I'll pick travel, and then we're gonna call this one airfare. Again, let's say I do want to keep details of that. So I'm gonna do airfare, sub account of travel. There we go. And then down here, instead of clicking save and new, I'm gonna click save and, instead of clicking save and close, I'm gonna click on save and new. And we'll do the next one, category type, expenses, detail type, where are you, travel. And the next one was gonna be lodging, which is basically hotels, Airbnb, hostels, that type of thing. And that's gonna be a subcategory of travel. Notice that I'm creating the new account, which is an expense category, and I'm making it a sub account of travel. Save and new. So we got airfare, we got lodging. Let's do expenses. Let's select here travel. What else we got? Let's do transportation, and that would be like taxi, Uber, subway, bus, all that stuff. So we got transportation under travel. Perfect. Save and new, and am I forgetting one? I got airfare, I got transportation, I got lodging. Let's do just one for miscellaneous travel. So let's go to expenses. Let's select travel again, and let's call it miscellaneous travel. Also under the travel category. Okay, perfect. And then we hit save and close. And now we're gonna scroll down and notice that I got my travel category, and then I have a little indentation letting me know that these are subcategories or sub accounts. So now I'll be able to not just put stuff under travel, I can put it under its subcategories. Another popular to do is for car and truck. So I'm gonna edit car and truck. I actually don't like the word car and truck because it gets confusing. So I'm gonna change this to vehicle expenses. Okay, and I'll click on save and close, and then I'll create some of the sub accounts. So let's start with new, and let's go to category type, expenses, detail type. We got the vehicle or car and truck is auto. There you go. And then we're gonna call this one gas. Okay, this is just for like fuel, gas, that type of stuff. Let me do gas/fuel just in case I happen to type fuel in there instead of gas. Hit the subcategory, and this will be a category of vehicle expenses. There we go. Same thing. Click the drop down, save and new. Category type, expenses. You'll get used to it. It's a lot of work. You get used to it, but once you get the hang of it, you get it right every single time. So we got fuel. Let's do parking and tolls. Also make the subcategory of vehicle, and then click save and new, and let's do another expense category under auto, and let's do the car payment, car lease payment. So let's say, for example, we have a car that we're leasing for the company, and we're doing a car lease payment. Now, if you're not doing a car lease, if the car was actually purchased, it gets a little bit more complicated than that. I don't have time to get through it on this video, but for an actual purchase vehicle, you would have to have a portion of a payment going to interest, and the portion goes to pay off the loan, like to pay off the Toyota loan that we created. So you only have an expense category for cars when it's a lease. When it's a purchase, you have to split it between the principal, which goes to pay off the loan, and the interest. Okay, let's do save and new. And what else am I forgetting for auto? Let's do expenses. So we got the fuel. Let's do the insurance. So let's do auto insurance. Okay, let's type the whole thing up. Auto insurance, and let's do, what was it? Vehicle expense. And let's do one more, save and new, and we'll pick expenses. We'll pick auto. Let's do it. Auto maintenance / other auto. Okay, other auto and miscellaneous auto. That's under vehicle. Perfect. And save and close. Perfect. So now I got a real nice chart of accounts. I got my balances, bank, credit card, loans. I got depreciation of some of my assets. I have my income categories the way I want them. I have my cost of goods sold categories the way I want them. I have my expense categories, hopefully the way I want them. I even got some subcategories. And I know it took a long time to get here, but a nice setup, nice chart of accounts, good preferences gives you a real positive experience right